Welcome everybody, and thank you for joining. Welcome to the channel, and please remember this is just purely for educational purposes. So today we have a long stock idea, and the name of the company you may have heard about this restaurant chain before called Chipotle Mexican Grill. So we have on screen the chart. It's a company that's been around for quite a while. As you can see, been kind of like ranging uh, over the last couple of years. High price stock. Okay, so started last couple of years at around 1800, dropped just over 100 to break the ceiling of the 2000, and then after the last earnings report, gap down all the way to say the mid 1800 level, and we are currently here. Okay, so why would I want to buy this stock at the moment? Well, we have seen a number of positive commentary on the ISM non-manufacturing report, advising that prices are coming down across the board for most commodities. Now, for Chipotle, if we go back to their publications, the communication that they provided to shareholders and to the public, they benefited particularly at the beginning of the year, which you can see here, right? They benefited from decrease in costs in specific foods, especially in avocado, which is a high price food for them. That's one of the reasons why the company was doing so well here, right? And it stayed that way up until the summer when we had this gap down. So what happened? When we had that gap down, what happened was that even though the EPS was good, they missed on sales, okay? Which is fine, it's completely out of their control. But what's happening at the company? Well, at the moment, they have a new CEO who was placed by Bill Ackman, the famous investor. So we'll have to keep an eye at what Bill says, what Bill does about the company, because he still does have a stake in the company. But in terms of how they've done, let's look at the stock year to date. By the way, this is the platform that I use, but doesn't mean that you have to. The stock is up 28% year to date. And that's because they have at the moment a plan that they're rolling out to open new chains, and also they're increasing their digital capabilities, delivery, drive-through. They also introduced dual grills to reduce the cooking time of each one of these locations, right? Overall, their plan is working, but it was just a little bit slow on sales. The reason why we saw this gap is because that's apparently the strongest season for sales this year. But we have a very important macro factor in front of us, which is Chipotle. One of the reasons why it performed so well over the last few years is because they were able to pass the new inflation to the consumer, right? So when most of the market was down, look at what happened to Chipotle. And they have advised that in Q4 this year, they will decide as to whether they continue to do that. So at the moment, everybody's just waiting and hoping that inflation is going to be subdued. But as we have seen, that is not the case, at least for the moment. So it's very likely, in my opinion, that investors seek refuge, they seek protection in a stock like this that is gonna hedge them against that inflation. So we'll have to see whether or not Chipotle decides to do this. So back to the company itself, I had a look at the performance from Taco Bell. For those of you who don't know, Taco Bell is part of a stock called Yum. So those guys, Yum Brands, own KFC amongst other restaurants. But to the if you go to the investor relations of Yum, you can see that the performance of Taco Bell has actually been quite positive. Look at what's been happening with Yum recently as well. It's been dropping down. There's been a general market sell-off, so that should not be too big of a problem for us. But particularly, uh, with this stock, particularly with this stock, Chipotle Mexican Grill, we have an interesting PE here situation. So look at, for example, this is the price to earnings range that we have been seeing. So it's been going down for a bit. Now, am I saying that we want to buy it because it's at a relatively low? Well, not necessarily, uh, but we have to be cognizant that these levels at where it's sitting at, have a look, is very, very close to the start of the pandemic. Look at this is around March 2020. Look at what the price did and look at in terms of P valuation what it got. So we are at a very, very similar level here. Okay. So in terms of downside, we have, assuming that we look at the history, right? We have very little downside here. There's low chances unless things start going south of the company to get much lower than this. But in exchange, look at all the upside that we can have, right? So this is part of the reason why I think is a good time to buy the stock. Um, so there's a few other factors that I think are going to be a tailwind for them. We have seen that the economy is cooling down quite a bit. This is considered fast casual, so it's not your typical junk food, fast food, McDonald's kind of type. It's a little bit more premium, but still people use it in a situation where the economy is not doing so well. And one of the biggest problems as well is the unemployment rate, which is being increasing. And I had a look at the numbers from the census. I'm going to put them on screen quickly. So I think you can see that. So you can download this for free, this data. Uh, you can see the average weekly hours and look at, for example, how the unemployment rate, the weekly hours, has been increasing. So that signals to us that people are working more hours. That's a good thing. Also here, it says the unemployment rate has been going up from beginning of the year at 5.7. It got a little bit better, but now is increasing. So this likely is going to help them uh, onboard more employees and retain them without necessarily having to pay a premium. So that's one of the biggest problems in terms of employee staff retention, and that's critical at this stage because they are opening a number of stores, right? So particularly for them, they open a good number of stores at the beginning of the year, and they're left to open quite a few more. So they opened 41 in Q1 and 47 in Q2, and they have at least 162 more to open before the end of the year. So all in all, looks quite interesting. Summary, I want to buy the stock, good hedge for inflation, buying at a very low relative valuation to its own history. So limited downside with potentially good upside. We'll have to see what happens. And we'll have to keep an eye on what's happening with the sector, what's happening with peers like McDonald's, Starbucks, Yum, Wingstop, and we'll have to keep an eye as well as to what is happening with Bill Ackman. What is he saying? What kind of moves he's saying? I couldn't find anything interesting in the options market. The stock is very, very highly priced. So if you go here, if you go to barchart.com, just one of the many that you can use. Uh, Chipotle Mexican Grill, CMG, that's the ticker. You can see the options. Because the stock has such a high notional value, right? It's priced at almost 2,000. The price of the options is just crazy. It's just crazy. And unless you have a very big account, to buy those contracts, you're going to need a lot of capital. So let's take a look at the next expiry, end of October. And you can see, right, a call contract would cost you $70, and you have to multiply that times 100. So you're spending like 7 grand just on one leg. So I'm gonna make it more simple. Just buy one share, which is currently selling at almost 2 grand. From there, you can scale it up if you want, but that obviously is depending on your capital, right? So hope that helps. Uh, Welcome again, and let me know your feedback.